Hi, Shay Dobson here, and I am a tax attorney who shows you the moolah. Specifically, I specialize in finding the hidden money in your business by identifying tax reduction strategies and business optimization strategies, such as strengthening your asset protection by use of your business structure. I also have people on my team to review employee benefits, to identify cost containment strategies for the small business, and even the one person entrepreneur. Now, I wanted to pop in because I received an interesting email today from the IRS. I get emails all the time, email updates all the time, but this was quite interesting to me because it ties directly into what I do, tax planning. Now, before I move forward, I would like to clarify that I am not talking about tax preparation. Tax planning is different from tax preparation because at tax prep time, if there has been no proactive tax planning done throughout the tax year, then there is nothing a tax preparer can do to ultimately lower your taxes. It is what it is at that point, and they can't perform magic. Now, to be clear, I am not a tax preparer, but a tax planner. So my recommendations will change how you report things to your tax preparer at tax time. So I am the plug who would put money in your pocket. Now back to the IRS email. So the IRS sent a tax tip, which was tax tip 2020-102, if it matters to you. But it said that taxpayers must pay no more than the correct amount of tax. And it goes on to say that taxpayers have the right to pay only the amount of tax that's legally due. And this is one of the 10 rights known collectively as the Taxpayer Bill of Rights. So this IRS tax tip directly ties into tax planning because the IRS encourages taxpayers to use the IRS code and tax laws to their benefit because this will result in only paying what is legally due. Now, what I find is that a lot of business owners and their advisors are intimidated by the tax code, and some believe that it is a system to punish you for making money. But honestly, the majority of the tax code is written to help the taxpayer save money. The tax code is really a series of incentives to do the things that the government wants you to do and receive a benefit. Now, here's the side note. This chat is in no way political, but clearly I'm just stating facts about the tax code. Now, for example, the government wants a booming economy. So if you own a business, you get to deduct business expenses. The government wants housing. So if you invest in real estate and provide affordable housing, you get benefits such as depreciation. And lastly, for example, if you create jobs, you get credits and deductions. Now, all of what I just named were ways to reduce your taxes, not increase them. So, for example, you have legally overpaid your taxes if, so let's say you hire 3 people who are in a work opportunity tax credit target group. Now, for those who are not familiar with the work opportunity tax credit, it is a government incentive for employers to hire people in a targeted group, such as an ex-felon, food stamp recipient, military veteran, the long-term unemployed, to name a few. And the employer will receive a tax credit if they follow directions. So back to my example. So let's say you hire 3 people in the targeted group and they work 400 hours during their first year of employment. Now, for simplicity purposes, let's say that each employee qualifies the employer, yourself, to receive a $5,000 credit. Now, this totals a $15,000 tax credit. And a tax credit is awesome because it gives you a dollar for dollar reduction of your tax liability versus a tax deduction. Now, for you as the business owner, you must have followed directions. And you also must have known about this credit. But if you didn't, you've now legally overpaid by $15,000. So let's say if your tax liability was $40,000, your tax liability could have been $25,000. Now, because remember, the tax credit is a dollar for dollar reduction in your tax liability. So, this is important because the IRS encourages you to use the tax code, but they're not going to hold your hand and walk you through it. Neither is tax preparation software. They're not going to do any tax planning for you. It's proactive, it's during the year. But I encourage you to do some type of tax planning, some type of written plan where you know what your goals are, you know what you're doing, because I can guarantee you that it will increase your bottom line. Thanks for listening.